Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin. Wow, do we have a busy show today. So let's just hop right into it because we have four guests. 8:15, we're joined by Tracey Ryniec from Zacks Research. 8:35, we have Kristi Ross from tastytrade. 9:15, Christinia Qi from Domeyard, a quant fund. At 9:30, Sunayna Tuteja from TD Ameritrade. Of course, we're going to talk about yesterday's market action and some movers from this morning. So, Joel, let's get right into it. What's going on in the S&Ps?
Blood in the streets in the town of New Haven. The SPOOs are really in a free fall right now. We are down 25 handles at 26.53. Just made a 52.75 low. I'm not even going to talk about resistance here. Just looking for maybe some kind of rebound mid-range, but wait till we settle down here and actually find a low. Two levels on the downside and only two levels to keep in mind. 26.4275. That was your intraday low on February 14th. And 26.27 was your actual Globex low on that day. That's the lowest I have on my sheet here. Bitcoin, the futures are trading in the red by $220. Still holding at 10,000, above 10,000. Crude, 60.57, down 42 cents. Little flight to quality here in the gold market. You never know how gold's going to react on days like this, but up $18 at 13.23.20. Silver trying to get over 16.50, up 17 cents at 16.44. So SPOOs just made a low at 52.75. See if you get a little pop off that. All right, Spencer, we no messing around today, no jokes, we just all business with 5 guests today.
I guess let's start with we have to start with the tariffs thing from yesterday. We just have to. We have obviously, unless you live under a rock, you saw. We knew that there'd be a meeting yesterday. We knew that there'd be good headlines coming out for steel stocks. I didn't realize how negative it would be for everybody else. But we've got steel tariffs and aluminum tariffs. We don't know when they're going to start. We just know that they're going to start, and maybe a trade war. I don't know, but
trade war. Well,
they crushed everything.
I don't want to get in trouble for saying this with some of our chatters here, but I mean, trying to revive the steel industry. I mean, you talk about. I feel like I'm going back like to the 1950s, 1960s. I mean. Yeah, a lot of things have gone on in trade wars and everything, but the implications of trying to revive an old industry, to me, I don't know. I don't like the implications of that. And then a worldwide, a trade war is not good for us. But
and I read a stat. Well, I wish I could. I wish I could find it. Here we go. I found it. No, I can't. This is not it. Anyway. No, but the stat is that the steel industry employs a fraction of the amount of people that are employed by the auto industry, the infrastructure industry, airline industry. This is going to affect all of them because, the automakers are going to have to pay. Boeing will have to pay for more to, make their planes, and GM will have to pay for more to make their cars. And this is just, oh man, there's so many implications here.
Yeah.
There's just so many implications.
I know. But you know what? There's other things going on in the market. I mean, that was the excuse yesterday. Also, Putin yesterday talking about, an ICBM with unlimited range. That's not a good thing. A trade war and a world war are definitely not good things. And you also have a rising interest rate environment that we know about that. So a couple weeks ago, that was one thing. So there's a lot of different things going on. Also, we've had just a tremendous run in the market, since 2007, 2008. So a lot of different factors going into it. But the only thing we can really evaluate is what we see on the screen. And right now, a big down open. S&P futures trading down 23.5.
Well, can we just start by looking at GM real fast? Because I just, on the day that they missed the already bad sales estimates, right? They reported February auto sales down 6.9% versus a 5.2% estimate. So it was already a a bad estimate. They missed it by a lot. And then on that same day, they come out with this negative news that will impact how they build their cars and how much it will cost to build their cars. So let's just look at that chart.
Okay. General Motors. Well, we're traded down in the pre-market here, 36 cents at 37.43. It took a while to fill that gap. And I was telling myself, 38.5, 39, I might want to look at this thing and, maybe add some of my holdings, and it just blew right through there. So today, let's see if we can find some levels now well under $40. Yesterday's low we've taken out. Well, we're trading right at yesterday's low, 37.41. So you need to hold that area. Trading down 1%. Spoos are down about that too. 36.62, folks. That could be a level on the downside. That was your September last year's low, 36.62. That's a potential support level here in General Motors.
Spinner noting also GM did a secondary offering as well. All right, I guess you want to go into some earnings or something. I mean,
you're the producer, Spencer.
Right, we got a lot to get to today. Let's just go into the earnings, because I mean we could talk about the implications of this steel thing all day, but I want to get to some stocks specifically moving off of news from this morning, which is earnings. So let's go with JCPenney to start with. I don't know. Do we even still care about this stock? But whatever. JCPenney, 57 cents versus 47-cent estimate. Sales of $4.03 versus $4.05 billion. So a mixed number on the Q1 numbers. Fiscal year guidance coming in line more or less for JCPenney. So, whatever.
Street leading the right way into this one. Double top on let's see here, the 28th. So that was Wednesday and Thursday at the 438, 436. But that's history. 350. You've just hit that on 3 consecutive bounces, and you're getting a little bit of a rally here at 361. So we'll keep an eye on 350. According to the daily charts, you had a low exactly at 350 on February 14th. And then you could just look at these levels, 350, 342, 333, 323. So, each dime, it looks like there's some buyers, probably some shorts, maybe want to bring it in here, coming back on the upside to fill the range. Big range yesterday. 369 was the low. So, hey, maybe you'll be quick and get a gap fill at 369. And I'm sure there'll be mounds of sellers at that close of 392.
All right, moving on to, I guess we'll go JWN and stick with the retail theme for right now. Nordstrom's reporting yesterday after the bell, $1.20 versus $1.24 on the EPS. Sales of $4.7 versus $4.62 billion. So a miss on the EPS, a beat on the sales number. Fiscal year numbers coming in line, at least for EPS. Sales was light for the fiscal year. They also say they do not plan to repurchase any shares while they're exploring this sale that I thought was a done deal, and apparently it's not. So I don't know.
Privatization.
Yeah, the go private. So I don't know.
I mean, it's tough reporting on a day like this. The Spoos are down 25. I mean, just the market sentiment. You are trading near the lows of the pre-market session. 47.25 is where we're trading. 47 is your low. Now, that did not trade on a lot of volume. You just hit 47 again. So you have a buyer here looking at 47. No confirmation on the daily charts that is a good level. But I can tell you, if we do take that out, you may have a ride down to 46.20. That's your February 9th low. But see what happens. Seems like you have someone wants to bring in some stock here at 47.
Let's go to Foot Locker. FL reporting this morning, maybe one of the biggest ones from this morning. Q4 adjusted EPS $1.26. That beat by a penny. Sales $2.21 versus $2.22 billion. So pretty much in line estimates or in line numbers for Foot Locker on the Q4 results. They did say they see a weak first half of the year in terms of same store sales though. So.
All right, Foot Locker, Street leaning the right way into this report. You traded over $50. That was on Tuesday. You hit 50.61, close 45.88. But the pre-market action is what we're going to focus on here. 40.51. That is your low. You've got a 2.5-point bounce off that. So a little buyer's remorse here. I think as we pull back, you will find buyers. 40.45 confirmed the that low in the pre-market, because at 40.45 was your November 29th low. After that, a big drop to 38.67. And I just want to bring up the chart of coals yesterday. Holy mackerel. That thing opened up. They thought they actually took it down even before the open and then went straight down. So retailers not acting that well to earnings.
I want to actually go back to the steel thing yesterday that I forgot. I wanted to bring this up earlier, but I saw this on Seeking Alpha this morning. But a 2017 report from the U.S. Department of Commerce said that Canada and Brazil, not China, would likely suffer the biggest impact of any U.S. Tariffs on steel. So can we look at like EWZ right now, which is the largest Brazilian ETF by AUM?
Spencer, wow, pulled that one out of his hat here. Traded down 48 cents. EWZ's pretty decent volume here. If you're trading this ETF, let me see. I see a low at 45, a couple lows at 45, but we are taking that out. After that, if we can't get back above 45, you're looking at the lower 43 handle. Actually, yesterday's low was 44.86. So it's going to be the point of control off the open. But basis the daily charts up pretty wide open down to 43.50. There's a couple lows that you had there back in the middle of February.
What about EWC, which is the largest Canadian ETF by AUM?
Oh, let's see here. That chart is not looking good here. It's flat. Major resistance if you get up near 28.50. Big seller here. Below yesterday's low in this, 27.37 was the low for yesterday. So Canada's holding in here. But below that, look out, 26.92. We'll call it 27 even. That was your February 9th low.
And then let's just pull up the chart of AKS or Alcoa or any of these steel stocks.
Well, they've been getting some pops off this. I know AK Steel here. How'd we do? Just have a wall of 575, 580. Cole came over here and was talking about that level. You hit it in the morning. You went down and tested the lows. Good support, 515, 521, but man, this just can't get over 580, $6. Big resistance up there. A close over 6 would be a little bit of confirmation that of a breakout. X does whatever it wants to do. That made a new high for the move yesterday at 47.64.
But they're hitting it this morning, though.
Yeah, they are hitting it this morning.
Everything.
Yeah, down $1.41, 44.80. I mean, yesterday's low is way down. I mean, folks, if you really want to wait on this one, there's been 4 lows between 43.26 and 43.78. So call that 43.50. Good support here in U.S. Steel.
All right, 8:15 now or 8:14. We're going to take a quick break, and we're going to grab Tracey Ryniec, stock strategist at Zacks Investment Research. We'll be right back with Tracey. Welcome back, everyone. Spencer Israel, Joel Elconin, now here with Tracey Ryniec from Zacks Investment Research. Tracey, how's it going today?
Hi. Good. A lot going on.
Yeah. What was your take on the events of yesterday?
You mean the market sell-off or the tariff issue or
all of it?
Both? I don't know. I feel like it's going to sell off on something like this because putting tariffs on is a big issue, and it could trickle down into a lot of businesses if this actually happens. We don't know for sure that it's actually he's going to follow through and actually do this. Then Congress will probably get involved too. But I feel like the market is just using this as another reason to continue the correction that we had from a couple of weeks ago. So
I think
here we are again, basically.
Tracey, I can't believe Spencer asked you about something like the markets with Michigan basketball playing again today. I mean, we got to touch on the important stuff first, right? Are you
yes.
You leaving work a little early today to go watch the game?
No. I'm not really watching the basketball. I always just wait until they get into the tournament if they get into the NCAA tournament. And then I see what happens.
Okay.
I'm much more of a football fan, but that hasn't been so great. Maybe I should switch over to the basketball.
All right. The chat's buzzing here, Tracey. Because got a lot of fans here. John Dodson, Angie Baby, all followers of your work here. And let's start out with retail stocks. And I guess Macy's is not going out of business.
No, that was the myth. You did have a real good buying opportunity with some of the department stores, last year when they hit those lows. But yeah, Amazon, it's obviously the retail giant,
right?
But we don't really know what they do.
We
don't know how good they are at the actual retail side.
Why don't we know that? I mean, why do you say we don't know how good Amazon is actually at the retail side?
Because we only know them as the platform for selling other people's goods. We don't know what they can actually do on their own because they basically kind of hide that information. So, for instance, they launched their own clothing line, several of them now, over a year ago. And the one, they never tell us how they do because these are small businesses in the grand scheme of their business, obviously. But word kind of leaked out that the one clothing brand made $20 million in revenue possibly in the last year. Now, when you look at the big retail suppliers like the G3s or the PVHs, those companies, they're doing over $1 billion in revenue. So this 20 billion or the 20 million that we think they made off of that is like nothing. And then you see companies like their furniture line that they launched, which they didn't even put out a press release for. And we have no idea. Are they selling couches? Nobody knows. And if it fails, they'll just kind of shut down that part of the website and say nothing more. But to say that those furniture brands are, competition for West Elm or Ethan Allen, the only way we know kind of what's going on is from Ethan Allen. They are selling now on Amazon. They have their own platform on Amazon with their brand. And they said it was under 2 million in revenue for last year with that partnership. And, again, it's basically nothing compared to their overall revenue. So that's what Ethan Allen is doing on Amazon's site. So what is Amazon itself doing with a brand nobody even knows?
Very, very interesting. So they do call the company and try and get answers to these questions, or, is this stuff you're finding out in your research?
Yeah, they won't tell you. So that's why you have to go in this roundabout way to try to figure it out by, looking at other sources like Ethan Allen, who is also on their site. So yeah, you can't really find out anything. You just get these clues. Again, for instance, they just did some layoffs at their corporate headquarters. in certain divisions, and a lot of the analysts were looking at where those layoffs were located as maybe clues that certain areas were not succeeding as well as what you might think. But that's all you can really do, because as they've always done, they just give these broad numbers, and they don't really go into the nitty gritty of certain of these divisions. So we don't even know.
So
how
obviously
well they're actually doing.
you're not, as far as following the stock. I mean, it doesn't sound like you have it on your buy list. I mean, do you have any fair value in your opinion, for Amazon? It's really not backed off as much as the rest of the market, trading at 1472.90 right now. Do you have a fair value, or is it just like you're just hands off on this one, not investing or not making any calls on it?
No, I actually like Amazon as a business, but only because of the AWS. That's what I have always liked about them. And as soon as they created the cloud and started running with that, that's where most of their revenue actually comes from as far as profitability. So that's the business side that I like. So I like Amazon for that reason. And also because they are, basically in everything. And I think you have to own Amazon. I own it in my own personal portfolio, as much as I complain about these things with the retail side. But I don't believe that they are a retail killer like everybody else assumes.
That's great.
Or a killer in any other category that they enter necessarily. I don't think they're going to put, Kroger out of business in supermarkets either.
All right. Interesting comments on that. A lot of questions here about Ulta. One stock that, had a tremendous run, came down very hard, tried to recover, and now kind of back down again here at the $200 level, really at the lows of the move here. Tell us about Ulta Beauty Inc.
Yeah, I'm not sure why the panic in Ulta, but it does remind me of what's going on in a lot of the other retail stocks. And I feel like they maybe just need a couple quarters here to get some of the momentum back. But we'll see, because they haven't reported for this quarter yet. But I do think there was the fears about Amazon there as well, which I think are unfounded, given Ulta's reward program, which is the best in all of retail, basically. And it's actually a really good rewards program that rewards you. So people enjoy being in it, and it drives their business model. But there have been a few hiccups recently that I hope that they do address in this next conference call. I'm sure they're going to get asked about it, including this issue of possibly selling or reselling used makeup. That could be an issue going forward, because you never want anything to impact like a PR angle with a retailer. So far, it really hasn't, but I do think some investors are wondering what's going on with that. So I hope that they address it. But otherwise, they have a perception issue with their comps as well. So they're the only retailer doing double-digit comps, and they've done it for, I want to say, at least 18 months. It might even be 2 years. And people don't realize, it's year-over-year comps in retail. So if you did 10% the year before and you're doing 12% this year, well, to do another 10% in the next year's quarter would mean 30% growth at that same store with basically the same or similar products. That's incredible. Like, no one is doing that. So it has to slow, but this freaks people out because they think, oh, it's slowing, but not really. So if they do 8%, is that, a negative? Some are looking at it. Oh, it is. They're no longer doing 10, but no retailer could do 10 for, several years. It's just not, especially a mature retailer like they are. So I still like Ulta. It's at the top of the industry. If it gets a lot cheaper, as a value investor, I'm definitely interested in buying. But I'm wait to see what happens with this earnings report. So we'll see.
We are getting some more questions. One question here is, how do I follow Tracey? I know you with Zacks Research on Twitter. Why don't you give our listeners your Twitter handle?
Yeah, it's just my name, but I do have the Polish name. So it's just at Tracey Ryniec. Last name is Ryniec. I'm also on StockTwits, so you can follow me over there. I'm also under the same handle, just at Tracey Ryniec on StockTwits.
Okay. Now, John Dodson wants me to ask you about General Electric here. Boy, oh boy, what a fall from grace here. Where's it at? I've even taken it off my screen here.
I'll give you a hint. It's at lower than I bought it at.
Yeah, we told you not to buy it, Spencer.
Oh, no.
It's okay.
Okay.
Speculative.
What do you think? GE, General Electric, can they right the ship?
I just feel like management has no idea what's going on there. And that makes me nervous as an investor because they still haven't told us who authorized the 2 planes, right, for the prior CEO. The old CEO he says he never authorized it. The board and apparently no one else in the current management structure said they authorized it, but somehow there was a second plane following him around the world wherever he flew. Like, I just can't even comprehend how this was authorized, but no one knows who did it. And they still can't figure out who told them to do that. So if they're flying a second plane, what else is going on that someone authorized that no one knows? This is my problem with GE, even though I feel like it could get cheap enough that, again, as a value investor, you would just go in there because it's that cheap and its assets are worth something. But management, when they get that bad, I feel like there's too much rot there in management, even though they have some new people in. I don't know. I'm staying away from it for now, even though I'm a big buyer of these kinds of stocks when they do crash down and everybody's fleeing, but I'm not sure that it's as low as it's going to go. I don't know. But I'm watching it close. I know Warren Buffett was asked about it because this would be the kind of company he would go into if it got that cheap. But so far, Berkshire Hathaway hasn't jumped in there either.
Tracey, I think it's a case of no one wants to admit that they authorized that a second plane fly around and follow the CEO wherever he goes, just in case. I think they know. They just don't want to. No one wants to own up to that.
I don't know. They claimed they were doing an investigation to find out who authorized it, and then they haven't said anything. So maybe they did figure out who it was, and then it's too embarrassing for them to say, oh yeah, this guy who was like a vice president said, or whatever. I don't know.
No one wants to be that guy who gave the okay to follow the CEO
Not good.
in the second plane.
Let's just let you go here in a minute or so. Any other sectors or, individual issues that you got on your radar here as, the market's pulling back off all-time highs?
Well, I'm watching the energies again. I watched them all last year, and some are hitting 52-week lows again, even though crude is, still hovering above 60. So I feel like there's a lot of value in energy, and a lot of investors are fleeing it or fled it last year and never went back in. So I feel like that's a value industry that people should be watching.
All right. We've been on the line with Tracey Ryniec. She's a stock strategist at Zacks Investment Research. Has given us some great calls over the years. We've been interviewing you. We love it. You give us great input. Our chat is buzzing. You got a lot of followers in the chat as well. Thank you for helping promote Women's Wealth Forum that we're doing next month. And we're going to get you on again soon, and always go blue.
Yes, for sure. Thanks. It was fun.
All right. 833 here. S&P's 52.75. Don't have much there, folks, but we did get a nice bounce off that. Still trading down 21.75. Crude still under 61, and gold holding on to those gains.
I've just been looking at my pre-market screener on Benzinga Pro.
Sure.
I do it every morning, but this morning in particular, just kind of looking at like what's up. I do filter by price, so I'm only looking at stocks that are $5 or more. And just kind of looking at what's up. Gap is up this morning, so they had earnings and the market likes it. So I'll give you the Gap number. GPS, they reported yesterday after the bell, adjusted EPS 61 cents is a 3-cent beat. Sales of 4.8 versus 4.67 billion dollars. So slight beats, good beats. A beat is a beat for Gap, and they did beat on both numbers. That I wouldn't say they blew it away, but they beat the estimate. Fiscal year EPS guidance though coming in much higher. $2.34 was the fiscal year EPS estimate. $2.55 to $2.70 is what they see is more likely for the fiscal year. So they did beat the fiscal year EPS guidance by a decent chunk, and that's probably why we're up this morning.
Yeah, the initial pop on the number took it to 35.60. Cooler heads have prevailed now in the issue, just hanging out up 270, 34.40. So really, going against the market here. Pulling up the daily charts, just this 34 is sticking out to me. I know we're 40 cents above it, but I see a 33.95 high back on February 16th, and then you sold off into the 30 handle. So 34, if we can hold 34, I think you can continue to rally here. Also another high in the 34 handle, 34.68, and then you have your pre-market high. But let's see. I mean, I don't want to, if I'm playing this from the long side here and under 34, I think you also have to see where this one opens as well.
All right, 8:34. We're going to take a quick break, grab our second guest of the day, Kristi Ross, the co-CEO of tastytrade. We'll be right back in a moment. Welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin, and we are now on with a new guest, someone who's never been on the show before, Kristi Ross from tastytrade. She's the co-CEO there. Kristi, how's it going today?
It's going great. Thanks for having me on.
Okay, one thing what I've been doing is with our guests on the show this week, and we like to ask it of our guests in general, but particularly this week, is tell us about what your morning market routine is. What do you do as far as getting ready in the morning, to look at the markets?
Yeah, sure. Well, as soon as I wake up, I look at the S&Ps just to see what's happened in the markets, just to get an indication whether or not I'm in for some opportunity throughout the day. And when I get to work, I generally pull up my positions and take a look at implied. I sort all the notables into or by implied volatility rank. Because I'm a trader of options and a seller of options, that's the first place I look. So I look for quick opportunities to sort of get in and out, because my days are filled with back-to-back meetings and calls. And so looking for some of those quick opportunities, I do that probably 3-4 times a day, but I can do it within, a few minutes or even while I'm on a call. I promise I'm not doing it right now, though.
Okay, that's good. Yeah, we do have a rule that gets broken a lot though on the show. No trading while on the show, but it does happen. Whatever. Moving on. Tell us a little bit about tastytrade. A relatively new brokerage.
Yeah, absolutely. So actually, tastytrade is the parent company, and we're an online financial network.
Right.
And we produce 8 hours of live programming every day. And we talk about the financial markets, have about 50 different shows. And for beginners, intermediate and advanced. And again, we sort of have a mission to make finance fun and actionable. So really having trades and strategies that viewers can take away and apply themselves. What we did earlier last year, so just over a year ago, we launched a brokerage firm, Tastyworks. And we're not new to the brokerage space. My co-CEO, Tom Sosnoff, was one of the co-founders of Thinkorswim. And so what we did is jumped back into the regulated and brokerage space and launched Tastyworks, like I said, last January. And we focus on options, and we really try to clear the noise. I mean, we have option stock futures, but we really try to clear the noise and focus on some of those, really focus on the indicators and things that help you trade options better, faster, all of that good stuff.
Question here from our chat. Are you planning on launching after hours trading at all?
So it's something we're definitely looking into. We have a couple more things on our development list, but that is something we're definitely looking into.
All right, Kristi, we're having you on. We're having all female guests on for our, in order to promote our Women's Wealth Forum next month in Boston. Just tell us about your start in the industry and how you worked up your way to this position with tastytrade.
Yeah, sure. So actually, it's funny because I started out in public accounting because I had no idea what I wanted to do, but I figured I'd be exposed to a lot of different companies, and the type of companies I ended up working on. And I was a bit of a finance geek and good at numbers, so it was a natural progression. But I was really lucky because the group that I got to work on and work with were traders on the floor and brokerage firms and advisors and all of that. And I almost immediately was like, that is the industry I need to be in. And I did make my way into a CFO position for a stock specialist firm on the Chicago Stock Exchange floor, the second largest. It was very active at that time. We're talking decades ago. Obviously, it looks very different today. And then I moved from there to Thinkorswim, and I was the CFO of Thinkorswim for a number of years and went through 6 mergers and acquisitions in 6 years. And then we jumped off and started tastytrade, and now Tom and I are co-CEOs, and we sort of divide and conquer running the business. He spends a lot of time on air. And most people know Tom by his beret and long hair. And I spend a lot of my time on strategy and deals and running the company. So it's a really great sort of yin and yang mix. But I love this industry, and it's, really seeing and empowering, not just, it's really, men, women, college kids, all the way to retirees. It's about empowering someone to really take control of their finances. And that, it feels really good when you have customers that reach out to you and say, oh my God, you guys have changed my life. I finally understand this stuff.
Wow, that's great. We had some floor people that were on the floor on earlier in the week, and the chat always, they like to hear floor stories from me. And, do you have one that, sticks out in your head, or, something you learned on the floor that, has shaped your investment style or your attitude towards the markets?
You know what? That's actually a really great question, because while I wasn't trading myself day in, day out, wasn't trading on the floor, I was down on the floor every day, talking to our traders, and. What I will say is, in the 90s, one of the things that was sort of a pivotal moment for me is, going down to the floor. It was here, in fairness, I'll serve this up, it was a guy's locker room, and there were very few women down there. What I found very empowering is that I could actually go and trade online. That's when all the online brokers and discount brokers were popping up, where you could actually place trades online. And so really the empowering thing was that online trading knows no gender. And I could go in, there were no biases or anything. So that's really when I started to be a much more active individual, do-it-yourself investor.
But what really got you interested in finance though? Like you said it was the industry that you wanted to be in, but why? What made it that way?
Sure, a couple reasons. Number one, I'm high energy. I'm very, very passionate. And that there was just this vibe and energy. My first couple of years out of college, the energy down on the trading floor was exceptional. And on top of that, listen, everybody in some way, shape, or form, I'd be surprised if somebody said they just weren't interested in money at all. I mean, just seeing the ability to control what or try to control what you make was really, again, empowering, being able to sort of take the reins on that. And it drew me in. And again, I like numbers, and it's something that is an area where I've excelled. And so being able to apply something that you're good at, able to make money and really sort of control and make the decisions and be willing to take the risks. And again, you can control some of that. That's what was attractive to me.
So let's talk a little bit about, the methodology that you guys like to teach there. Options can be very intimidating and, different momentum, there's momentum traders, breakout traders, there's high frequency trading and stuff. You guys take a very mathematical approach to the markets. And, what do you say to people that are intimidated by the options markets? Oh, I can lose a lot of money. Talk about the approach that you guys employ and how you relate it to your traders/investors.
Yeah, no, that's a great question. I'm really glad you asked. One of the things, the way that we approach the market, if you look at buying a stock, which can be expensive and you're using a lot of capital, right? You essentially have a 50-50 chance of making money. It could go up, it could go down. Those are the two directions, right? It could stay the same too, but highly unlikely it's just going to sit there. So in trading options, you have the ability to win, let's call it win, even if you were wrong on direction. And so employing different strategies here, I'll give you a good example. My go-to strategy is a strangle, where I'm selling a put, an out of the money put, and I'm selling an out of the money call. And I can dial up my, risk or dial down my risk. And I can actually look at what my probability of profit is on that. And so if the stock stays in a certain range for a certain period of time, I have the ability to collect some of that premium and keep it. And so one of the things that we do is we teach different strategies for different, I'll call it risk parameters that someone has. And we truly clear the noise. And it's exactly what you said. We teach a logical, mechanical approach. And our software helps with that process, identifying, high implied volatility rank, and looking for that and going, oh, here's where there's opportunity, and employing your strategy. And then it's really about time decay. And so looking at all of those factors, we teach literally step by step what that looks like, and then how to manage those positions. So, but here, back to the original point about stock, you have a 50-50, chance of making money. With options, you can actually employ those strategies with maybe an 80% probability of making a profit. Or you could say, hey, I'm watching the markets all day long. I'm going to dial it to 67%. And so really breaking it down for your risk level and the strategies that make sense for you, though all of those aspects are, it can be intimidating at first, but that's part of the reason that we actually created tastytrade to begin with.
All right, just one more question from me, and then Spencer has a few. Changing to different environments, right? You had this low vol environment, market just grinding higher, different strategies. Like, how do you know, selling strangles? I mean, do you finally get bid on one? I mean, I know you look at implied volatility, just talk about how important it is for people to adjust your trading style to the market environment that you're in.
Yeah, no, that's really important. I'll tell you, in just sort of looking at last year alone, right? I mean, last year alone was the least volatile year, in history. So you do need to look at different strategies, but that's one of the things we do is we lay out the different strategies. You can do an iron condor and have protection, a defined, risk trade. You can also, in low implied volatility environments, you can actually buy options. So we do approach the markets with the intent on selling, but again, we look at each individual stock or position or potential position to get into based on that. But you're exactly right. When you look at the market, you have to you can't approach every day, every market exactly the same way. And so we lay out different strategies for you, whether it's a vertical. You still have to have an assumption, right? You still have to start out with an assumption on what you think that underlying is going to do. But we give you and lay out the different strategies, whether it's a vertical, whether it's a strangle, whether it's, it could be an iron fly. I mean, there's a whole list of strategies, and we walk through in different market conditions when those tend to be best. So again, we make it very logical and mechanical, and we provide a lot of that education around that for those different market conditions.
Kristi, I had one or two more, but I will defer to our chat. You have some fans there. I want to ask a question here from Spinner in the chat. Do you look at options flow or option flow?
So in terms of when entering a trade, one of the things we definitely look at is liquidity. We're not going to enter or jump into trading anything if it's not liquid.
And then the second question, we got someone asking for a strangle trade for today. Don't know if you have one.
Yeah, well, so here, the couple that I was looking at this morning actually that are not earnings related.
Okay. Was
looking at BABA, because BABA has over like an 81% IBR, and I was looking at Facebook and Google. Google's, a little pricey. So I'm still trying to decide whether I want to do something there. And then when I look at earnings trades, there's Costco coming up in 5 days, and earnings for Target in 4 days. Netflix, that, I don't know, that's like 45 days out. But, those few in earnings are ones that I'm considering, because again, when I'm looking at implied volatility rank, we're talking about in the 70s and 80s, and anything over 50 is really, can be attractive when you're selling options.
All right, last question here, and this one's from me. Your biggest piece of advice for someone who wants to get involved working in the industry, not just trading, but working in finance.
Yeah, and my biggest piece of advice is really be bold, be confident, and jump in. Be willing to take risks. And so, particularly as a woman coming in and having an opinion and making that move and diving in, you don't have to have all the confidence and know everything about the markets jumping in. What you do need to do is have confidence in yourself that you can figure it out and that you will figure it out. And I think that's probably my biggest piece of advice is jump in and be willing to take risks.
All right, Kristi Ross has been on with us for the past 15 minutes or so. She is the co-CEO of tastytrade. She will be at the Benzinga Women's Wealth Forum March 21st in Boston. We look forward to seeing you there, Kristi. Thank you so much for the time. It was a lovely chat. Thanks so much.
Yeah, and according to our chat here, we're going to have to get you on again soon.
I would love to be on again. Thanks again, guys.
Right, thanks a lot, Kristi. All right. 8:51 now. What are we doing in the S&Ps, Joel?
We got to bounce.
We got to bounce. All right, we're in business.
Yep. We that 52.75. I can just be honest with you, folks. Nothing there. I had no level. Couldn't have picked that one from just throwing a dart at the wall. Now we're on the rebound, and when when you're on rebound on days like this, where you've already had a 32-point range. I look at mid-range on the day. Mid-range down, the spooze comes in at 68.75. That's a 50% retracement from that high of 26.84 to 26.52.75. So let's see if we will creep back up to that area on the open. If, in fact, we clear that, then let's see if we can see the close, 78.25. That was your closing price from yesterday. And then your pre-market high, after hours high, 84.75.
I want to look at Zosana Pharma, ZSANA GSAN getting a pop this morning. The issuance they announced of a new U.S. patent covering acute treatments for migraines, and they're already leaking a little bit, I saw, but got a big pop.
Okay, you got to give me that symbol again.
ZSAN.
ZSAN.
Yep.
Alrighty. All right, we got a pop, and wow, this is it's been a rocky few days here for Zozano Pharmacorp here. Popped over $11, and we have a pull back yesterday. Couple days of profit taking. One thing I would do, and I don't have a lot of history on this stock, is I would see why we popped over $11 the other day. What it was related to. Trading up $3.09. The initial spike took it to $9.74. Where was your 3-day high? Your 3-day high is 10.20. So to me, 970 to 1020, that's potential sell range. A lot of people got caught in this rally up and then this breakdown. So they're looking at this thing and they're like, man, if I could get out at $9, I'd be happy. We are below $9 right now. Trading up 314 at 860. In order to fill the gap from yesterday, you got to come all the way down. Yesterday's high at 647. So a lot of volatility in this stock. I just fear that on this rally here, a little bit of overhead supply.
And surely with the good call, it is a low float stock. They just hopped up to the top of my screener, so I brought that up. Let's go to JD.com. JD had earnings this morning. We didn't get to that yet. I'll do that now. Q4 adjusted EPS of 5 cents versus a 7-cent estimate. Sales of 16.9 versus 17.1 billion dollars. So a slight miss on both the EPS and the sales for JD.
All right. It's getting hit. It's down $4.16, 9%. Your spike took you right down. Your pre-market low is 41.58. Trying to rally here. I mean, I see one green bar after that 41.58 low, but we're working on a red bar here. Definitely some resistance here in the pre-market trading at 42.50. So if you're playing this, you get it early long. Just be aware that really since 8 o'clock, 43.50 has been your number on the downside. Bases your daily charts. When we ran into all kinds of problems back in early in February, or actually February 9th, this stock went to 40.93. That's only about $1.20 away from where trading. So if you're looking for a target on the downside, 40.93, that could be it. That was your February 9th low.
Let's go to the artist formerly known as Smith & Wesson, AOBC, American Outdoor Brands. So they had earnings, and I'm very intrigued by what they said about their guidance. I'll give you the whole thing real quick. Q3 EPS, 9 cents. That beat by a penny. Sales 157 versus $172 million. So they missed on the sales number by a little bit. The Q1 sales guidance, though, big miss compared to what Wall Street thought they would say. They had a $205 million estimate. They actually said it'd be closer to $162 to $166 million. So they came in very, very light on the Q1 sales guidance. EPS guidance extremely light as well. Fiscal year sales guidance light. Fiscal year EPS guidance light. So light guidance across the board. It did get a halt yesterday, but shares have resumed. And
someone was slinging some volume around here after hours in one bracket, the 1645 bracket. Over 300,000 shares traded as it went down to 689. So we're $2 off the low. If Dennis is here, I try to get him to make a lunch bet that the low of the day is in, and then he wouldn't take it. Actually, he's pretty upset with me about the steak dinner bet because he thinks I blocked the spoos on him at 2,800. But this thing's trying to recover. I see some resistance at 865 here, but that's pretty mild. That's a couple of the pops that you had. The initial surge took you back to 865. Just earlier this morning, you had a high at 868. Very minor resistance, though. I would not be shorting it. In fact, if it did get above that level, look for yesterday's low to fill the gap at $9. The close was up higher, 941. But I don't know. This thing might reach back 9 today.
Question from Big T in the chat asking about McDonald's. McDonald's,
that's Luke's favorite stock here, his favorite restaurant. traded down $5.10. Is that right? Is that an odd lot? What's the news? News me on this one.
I don't see any news on McDonald's this morning. I checked the PR newswire, the SEC newswire. Let me check again though.
Is that?
Make sure I didn't miss anything. No, the last news honestly was that they announced the resumption of their partnership with Disney, but that was some days ago. So I don't.
Are you sure? Luke or Nick, anything? Nothing on Mickey D's here,
I got nothing on Mickey D's. I got nothing on Mickey D's. Joel, why don't you give us some levels on Mickey D's?
Boom, boom, boom. I don't know. I don't know what to tell you. 150.37. That's your pre-market low. Giving out giving back a bunch of gains here. I'll give you a level 148.04. That was your June 2017 low. Are we bringing in Luke here?
Luke, why don't you come on here and throw on that headset right there, and why don't you? I think you had something to tell us about McDonald's. Yes. Can we hear you, Luke? Can you guys hear me? Do it one more time. All right, talk.
Can you hear me now?
Yes, we can.
All right, I'm live on the show. What's up, everybody?
What do you got for us on McD?
The only thing that I've got a RBC slashing its price target from $190 to $170.
That's it.
I don't know if that would do it. The RBC gets pretty aggressive, talking about same store sales. They've got a pretty negative outlook on the stock. Again, I don't know if that's enough to move this thing $5, but that's all that I got on my end.
Yeah, no, and JV Spec here in the chat is agreeing with you. So, big move for McDonald's, $5. I mean, you know how much stock it takes to move that thing during a regular session of $5. So, big windfall here for the shorts. See if they break it in. It's hanging out the pre-market low, so someone still has an opinion here, not letting it get back even above 151. Interesting move there in Mickey D's.
All right, it's 9 o'clock now. Normally we would call it a day and a week, but we have two more guests, but not on yet. We have a 9:15 guest and a 9:30 guest. So we have some time. We got 15 minutes of ticker time, folks. Give us your tickers. What do you want to talk about? We will discuss it. Can we look at the follow through yesterday in Overstock, OSTK?
OSTK. I can't feel my Facebook was lurking in this one. I think early. I know he was trying to buy it in the 53 handle. Not a bad day, all things considered. Made a 54.25 low. That was very early in the session. And rallied up to 58.70, trading down again here, $1.79. Only a couple thousand shares have traded here, so going with Mr. Market. That 54.25 area, if we get back down there, I think that's really good support. That was yesterday's low, and then you had 2-3, a double bottom at 54 even. That was back in February 12th and 13th. Coming back on the upside, since we are trading in the red, that closing price is going to mean something of 57.75. Getting a couple of requests here for the gold market, up 21.20, and gold sometimes moves with the market. Sometimes you have a flight to quality here. Did have a sell-off. I don't know. It's regaining its footing here. I'd keep an eye on a couple levels here. Your high on the 27th was 1338.40, and then you had a 42.90 high on the 26th. So my next target for this would be up at 1340. In order to really get a major breakout here, I know people are looking for this. You're up at 1370.5, and you've had a slow leak off that. So need to really clear that out, take out 1370.5 to make a run at 1400. But I see some intermediate resistance today at 1340.
We just did AOBC, so we got a request now for RGR.
Okay.
Peer play.
All right. Boom. Wow. $1.95 in the red, trading 43.25. Do we have much volume trading with this? A little bit of volume, but this is a big level. Got to hold $43. Absolutely. Your low yesterday, 43.05. Your 2-day low, 43 even. That is an extremely important level for that. Let's see how it reacts today. Currently trading at 43.25. So under 43. All hands are off on the long side here. These stocks are just, probably better places to put your money than these gun stocks. But keep an eye on $43.
AGN coming in from Matt.
Oh boy. The street did not like that news yesterday one bit. 2 days ago, 3 days ago, the stock was hanging out in a 166 handle. Made a low yesterday, 144.75. Bounced to close at 48.19. So quite a bit off that low, but that would be good support. I don't know if we're going to see it today, the way the market's acting. 48.19, that was your closing price, and that's where we're at right now. So kind of just be in favor of, if it stays green for a little bit, lean on that closing price. Yesterday's high is 51.80. Above that, you have a gap between 51.80 and 53.26.
I can't feel my Facebook asking about Brinks BCO. Is it time to back up the truck, Joel, and buy Brinks?
Do they carry Bitcoin?
It's not a physical commodity, so no. I would know.
Not doing well. Trading down a dime. I mean, you got something to lean on here. You're low in February. I'm sure that was February 8th. 71.55. Yesterday, you got to 71.95 as your low, trading down a dime here. So see what happens. We'll hold 71.55. Got a chance to rebound. Any kind of major rally, though, definitely an institution trying to work out of this in a higher 76 handle. I know that's not going to be relevant today, but several highs in the upper 76 handle. If in fact you break that low, that current low, not a lot to lean on. Back in July of 2017, you had a low at 66.10.
FireEye catching an upgrade this morning. We'll do some ratings now. FireEye getting its first upgrade of any kind since November 2nd. So exactly 3 months ago, an upgrade to overweight at First Analytics. Let's look at FEYE.
Sean Udall, favorite here. Just hanging in there. I mean, to say did finally cleared 16, now running into a hurdle at $17. You have your 3-day high at 17.18. Weekend to close at 16.72. Only trading up a nickel on this. I think to confirm another higher here in FireEye, need to get up and close above $17. Has not been able to do that. High close of the recent move has been 16.82. So maybe you'll get a shot at that today. That was your February 26th high.
There are a lot of downgrades this morning. Let's look at Walmart getting a downgrade and Oppenheimer to neutral.
Walmart
from outperform to neutral.
This is a pretty interesting chart because you had the 2-day move off the earnings report, and you put that low in. I think a lot of people thought that 91.24, 91.31, buy the dippers were prevailing. You got a nice run, but man, ran into a brick wall just under 94, 93.72 and 93.80. Now you're trading in the red here again, down $1.44. At the lows of the pre-market session at 87.64. We've taken out some long-term support here. If you're looking for, perhaps a potential bounce, you had a monthly low in November, and that was right at 87 even. That's only 65 cents away here. Maybe check to see if there's some institutional orders at that level as well.
Raymond James hopped on the eBay train, upgrading the stock to strong buy today. From market perform to not just a buy, but a strong buy.
Strong buy.
Strong buy.
Had the earnings pop, the earnings drop. You had a nice gap fill here, just under $41. The gap 41.10. That was the high on the day for earnings when it leaped to close at 46.19. And then a few days ago, you filled it by a pretty good amount. You went to 40.43. Now you're coming back. Your major resistance here is at 44.36. That's the recent high of the move, but look at this. You got 3 lower highs here since you hit that 43.46 or 44.36 level. So just keep an eye. I mean, we haven't even taken out yesterday's high yet at 43.11. So Mr. Market is not helping it with that. But just keep an eye on those 3 daily highs if you're looking to fade this off the upgrade. Coming back on the downside, I mean, we are green in a red market, trading up almost 1%. So keep an eye on that closing price if you want to try and bring a short in. 42.27, that was a close from yesterday, and your low is just below that from yesterday at 42.05.
VMware catching a downgrade this morning from Stifel to hold. Also, BMO Capital, while they're maintaining their outperform rating, they are lowering their price target by a whopping $4 on this one. But the downgrade this morning, it's Stifel to hold.
Yeah, not good here. This stock, this whole move off to 165 was when the Dell Technologies. I remember Dennis talking about that spread that he was trading one day. And he put it on, and he said he decided to do a little bit smaller size. And even on that smaller size, he got whacked. And so things have been a little bit out of kilter since then. Big downgrade, though, trading at the lows of pre-market session of 119 even. Don't see it really trying to bounce here yet off 119. So we've got some work to do here on the downside. Take a look at your lows after you recovered from, that big decline. You had a low at 119.19. So there was some interest there on the way back up. But if, in fact, that 119 level falls, you're looking at perhaps a $4 drop to 115.11.
Those were about the only ratings that jumped out to me. Spinner saying that U.S. Steel got downgraded by Bank of America. Yeah, I saw that as well. I kind of, didn't do a lot for me just because.
I don't mind that.
You know why
I don't mind? I mean, look at the run this thing's had. I mean, the whole election thing, run up from $20 up to $40. Back down to 20. Now you're back up here in the 40. Well, you were in the $46 handle. If there's been in a range, in fact, this is the high, this $46 level. You sniffed it once. You were over 40 or right near $40 in August of 2014. 47.33. That was your high back in July of 2011. And what did we hit yesterday? What's the high for this month? High for this month is 47.64. So keep an eye if this thing gets back up in the 47 handle. But it's a downgrade, and so we're looking for support. Pair of lows, we already talked about this one a little bit. The 43.50 area, you had 1, 2, 3, 4 lows between 43.26 and 43.78.
Last one that would do on the ratings front, and this is Deutsche Bank this morning is upgrading a pair of restaurant stocks, Bloomin' Brands, BLMN, and then Del Frisco's DFRG, both from hold to buy.
Okay, what's Bloomin' Brands?
BLMN.
BLMN. And
Bravo Lima Mary.
I got you.
Okay,
I got you.
Just making sure.
No, that's okay. Fill the gap, or just about fill the gap a few sessions ago. Trading up 19 cents. First, we got to take out 23.42. That was yesterday's high. And then your 2-day high is 23.75. Coming back on the downside, not much of a move off this. Trading up 19 cents. The close, 23 even. If in fact that goes, look for a test of yesterday's low at 22.33.
How are we doing in the S&Ps? We got about 4 minutes to our next guest.
Okay, we rallied up into the 27.60 handle here, but just not holding. Now only 5 points off the low. That little bounce took you to 26.65.50. I was hoping for a little bit more juice up to that mid-range at 68.75, but that did happen back into 57 handle.
Looking at my my pre-market screener, and really more of the same at this point. Gap is leaking a little bit. We saw that it was up much more earlier in the day. So we're leaking on Gap. So guess that just tells you watch
Where's
out.
it at? Where's it at? I remember I was looking at 34, 33, and I was a little down 33.60. I think our pre-market prep traders here hit that one. I mean, nice profits, weak market. I mean, we'll see. I don't know if it's going to go red on the day, but certainly well off that after hours high of 35.50.
I'm curious about Costco. They are reporting earnings next. Let me get the exact date. I know they're next week. They are the 7th after the bell. And so let's look at Costco, because I always like they're one of the largest reporters next week.
And you recently got a Costco membership.
Oh, I'm an executive club member. I'm at the highest level of membership. They pay me to shop there.
They do. I do get a little rebate at the end of the year. They do.
That's what I'm saying.
Let's see. Recovered just like everything else. Off the lows from February, and now leaking, giving back some of those gains. It's been a volatile market. So for me, when something like this made a new all-time high, a drop, another run up, I don't know. I think maybe people may want to lighten up ahead of earnings. Retail earnings have been kind of mixed. So I look for this one to be finding sellers, major resistance, just over 195, 195.52. That was your high on Tuesday. Coming back on the downside, if you're short, take a look at the 185.50 level. The reason for that, 3 consecutive lows, 85.69, 85.66, and 85.91.
All right, we're going to go for our third guest of the day now, Christinia Qi. And get ready to learn, folks. She is the co-founder and partner at Domeyard. If you've never heard of Domeyard, they're a hedge fund known for their focus on HFT. They trade up to $1 billion per day. So we're going to sit back and let her preach. We'll be right back with Christinia Qi in a moment.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Spencer Israel, and we have Christina Qi on the line. She serves as co-founder and partner at Domeyard LP, a hedge fund known for its focus on high-frequency trading. Christina, how you doing this morning?
I'm doing well. It's the dreary weather today, but I'm very happy otherwise. So thanks for having me, guys.
You should see the weather here in the Motor City. Well, first things first, how did you come up with the name Domeyard?
It's a great question. So when we started the company like 6 years ago, we needed a name. And we didn't want to name it after ourselves. That was the first thing. And so that we named it after kind of the next closest thing, which was back then the schools that we went to. So it's named after the MIT Dome and Harvard Yard, which is where one of my co-founders comes from.
So you guys couldn't get into Michigan? That's my own. That was my backup school. All right. Anyways, talk about how you got, interested in this crazy world of high frequency trading. Your firm trades up to $1 billion US per day. Something in school, or what sparked your interest in the markets?
That's a great question. I was one of those kind of crazy kids that's been into trading ever since my, high school, whatever days, since back then. And so basically, I knew I was dead set on being either being a trader or at least working in this industry, close to the traders somehow. And so, I've had a couple of roles here and there, being a trader on, like a traditional long only equities desk and also a derivatives desk, just very traditional, trading here and there. And one thing I realized was because I had, gone to a technology focused school, and I have that technical background, I realized I wanted to apply more of that, naturally just went towards applying more of a quantitative method towards the trading strategies that I wanted to do. And unfortunately back then it wasn't a good fit for the desk that, I was working on. And so I decided, okay, well, since we've been trading quantitative strategies for a while, why not just do it on our own? So we've been doing it on our own. And then eventually we were like, well, why don't we just start off and, just do it here. And if it fails, it's okay. We could always go back to working at a large firm. That's totally fine as well. And so we started it off and hit it off pretty well at the very beginning. So we were like, okay, why not continue? And then the rest is kind of just history.
What do you guys trade?
So today we trade a more, broader variety of products. Back then, what we did, we started off by focusing on CME futures. Of course, we were dumb and picked the most, the most competitive, the more competitive markets out there. But we started doing that. We started by trading some of the more popular, traded products in CME at that time, and did decently well for ourselves, but also, had a lot of struggles as most startups kind of do. And then today, because we're, been expanding the size of our fund, expanding our client base, and also our focus, we trade still mostly futures, but also we've kind of ventured into, FX and equities, and a little bit of just other things here and there, basically. So diversified, over time, I guess.
So are you guys, high frequency trading? Are you guys in for seconds? Do you have systems, different time frames that people are trading, or are you just in and out all day long?
That's a really good question. And it's funny because I'm sure you probably interviewed a ton of people who do high frequency trading, and everyone has a different definition. And so it's really frustrating. But for me, for us as a company, by high frequency trading, we're in and out, every millisecond, sometimes every microsecond, depending on the strategy itself. We'll process data at the nanosecond resolution. And basically we're as fast as we can possibly get, given the limited budget that we had at the very beginning. So that's where we're at today. We are in and out, pretty quickly every day. Portfolio turnover is really high. Our AUM is obviously really tiny. We're under 100 million. So we're registered as an ERA with the SEC. But even despite that status, every day we can trade up to like $1.5 billion per day, just because of all the turnover that we're seeing in our portfolio. And so I guess you're right. We're in and out. We don't these days, we don't put too much constraint on the holding period. So some of them, we do have the short holding period that I mentioned, but also we do have holding periods of a few hours as well. So it does kind of vary depending on the strategy and the product that we're trading.
Do you guys try and get flat, at the end of the day? I know, there's different closings and different markets, but are your systems, did come in flat, dumb, and happy and just turn the machines on again in the morning?
So today we are, and it's not necessarily, I'm not going to say if it's a good or bad thing. It's just more like because given the stage that we're at and the headcount on our team and other purposes, and the lack of volume that happens, after market close. For those reasons, right now we are flat at the end of every day. So I can go home and sleep without worrying about something happening overnight. Although we do trade 22 hours a day, so we do have someone kind of monitoring the night shift.
Okay.
So that's basically it. We trade like 22 hours a day.
How much human element is there? I know you guys do a lot of the programming. If it's like let's say Spencer and I are traders for you in the S&Ps. Do you guys just give us, you each have the same system, you're each monitoring it, or is it like you don't even need Spencer and me? You have automated trades, based on what's going on. How's it work over there at Domeyard?
So I'd like to say that it's completely black box, but I don't know if that's necessarily true. So what I mean by that is, obviously there's the algorithms they trade by themselves and they're making their own kind of decisions to trade. And so I don't know when, we're going to trade what kind of product or, what time they feel like it's the right timing to do so, because a lot of it happens too fast for the human eye to kind of see. However, that being said, there's a human element kind of in everything that we do, right? So like, there's always going to be a human that inputs the algorithm, that inputs the timing, that tells it, when the signal is right and when it should be triggered. And then there are always people who are watching the strategy as well. In case of, there's a 1 in a million event that happens that is totally, that we never would have ever predicted. And we need to actually manually go in there and try to figure out, do our investigation on what's actually happening to be able to stop it or keep it going if it's a good, depending on what it is. So, but yeah, there's always that human element behind the scenes. It's just that the trading itself, is done pretty much automatically.
Your own company and, obviously traveling and meet clients and stuff like that. Do you have like a do or a don't for people in the industry that are getting into high frequency trading or starting a firm? And do you have a good story or something that's kind of shaped your mantra here in this wacky world of high frequency trading?
Oh boy, we've made so many mistakes, so I got to pick one, and that makes it really difficult for me to pick. But I would say, to start off, I guess advice would just be, a lot of people have this big misconception about starting hedge funds in general, whether it's a crypto hedge fund, which I'm sure there's tons of people out there who do, or just a traditional long only or high frequency trading fund. One of the misconceptions is all you need to do is just buy a computer and, select a broker and whatever else they tell you in the books, to do the traditional stuff, and you'll be all set. You just have to hook everything up and have a strategy, and you'll be all set and ready to trade in like a month. And what we've noticed from our angle is that in order to kind of stay alive and to survive, that's definitely not the case. It took us 2.5 years to raise our first penny in our fund. A lot of that obviously is given my own age and my inexperience, obviously that makes sense, but we've seen the case for other people too, who are like 55 years old and have like dozens of years of experience. It takes them also 2.5 years to start up these kind of high frequency trading, quantitative focused businesses. And a lot of it was because also back then there was not a lot of technology out there, so we had to build kind of everything internally. But just, I guess, be prepared for that, if you have to raise external funding, then do so, that's okay. I know some people say that's not and whatnot, but, we did that, and that's why we're alive today, because we had the initial, we had what we call GP, venture capital funding in our company from strategic investors, as well as we raised funding simultaneously in the fund. And then once you get your day one investor, because no one wants to be the day one investor, and it's hard to get. Once we had our day one investor, then what we noticed is when we started to build a track record, after a few months even, we started getting more and more investors that would just reach out to us, just reverse solicitation. And today, it's funny because I think it was like a few months ago we needed to raise an additional 5 to 10 million in the fund. I email our investors. I say, hey, at midnight, if you want to claim that 5 million of capacity, send us an email, with the subscription form, everything filled out at midnight. And at midnight, we got 2 emails, from 2 investors saying, I want to claim that capacity.
Wow.
I want to invest that 5 million. And it's just hilarious to me because it's like, back then it took us 2.5 years to raise a penny in the fund. And today, I go out there raising funding and it takes me 5 minutes to raise $5 million. and which in the high frequency trading world, that's a lot of money to trade with. And so it's just surprising how the tables will turn once you have a good track record and once you've kind of done everything right. But there really is no cutting corners at the beginning, unfortunately. We had to hire a good law firm. We had to hire a good auditor. Everything has to be in place because everything is being tracked by everybody, and you can't hide your results. You can't do it from anybody. And so we just have to be extremely careful about that and, as transparent as we can in front of our investors, basically.
Trading any Bitcoin?
So I know people hate Bitcoin. I know it's obviously it's a very controversial area, but yes, we do. I think since we're known kind of as this young millennial firm that kind of, is at the forefront of innovation. Obviously, one thing that we have to look at is things that other people talk about. And one of those things is Bitcoin. We have done Bitcoin arbitrage. It's been pretty incredible, to be honest.
What are you arbing? Are you arbing the futures against the cash or different exchanges? What are you doing? Your arbing?
Futures against cash mainly.
Yeah,
and,
interesting.
We're lucky to be, we're CME members. And so we already kind of have that position where we can already trade multiple, futures products anyway. And it's just really funny to see the spread between some of these products in the Bitcoin space. It's hilarious. It's a very inefficient market still. There's tons and tons of players out there. Most of them are pretty unsophisticated still. So I would, it's an interesting learning experience for us. We're not treating it as a do or die kind of thing where we necessarily have to do it, but it's a very good learning experience for us because you guys are probably all familiar with this, but the analysis that you do with these Bitcoin crypto products, right? Like they defy any kind of traditional financial analyses that we might have learned in the classroom or even learned, trading traditionally. And so we just have to kind of throw that analysis out the window and figure out what other, new analyses we can use on these products, and then just kind of go from there and take it day by day as a learning experience, basically.
All right, Christinia Qi has been on with us. She is the co-founder and partner at Domeyard LP. Christina will be at the Women's Wealth Forum again March 21st in Boston. Christina, thank you so much for the time today. And there we go. There's our open. Thanks a lot, Christina.
Thanks for having me. Bye now.
We're going to take a quick break and grab our next guest. We'll be right back. Welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elconin, now joined by our last guest of the week, Sunayna Tuteja from TD Ameritrade. Sunayna, how's it going today?
It's going good. Thanks for having me, guys. Happy Friday.
Happy Friday. You are the Director of Emerging Technologies and Innovation. What exactly does that mean?
Great question. So thanks first for having me, and I'm excited for your upcoming event in March in Boston. So I think it's a nice segue to that. So at TD Ameritrade, as you mentioned, I lead emerging tech and innovation. We're like the startup within the mothership, and my team and I, our focus is really around sensing and discovering all the new technologies that are coming our way, from AI to machine learning, automation, augmented reality. But more importantly, what we try to understand and really focus on is how are these technologies fundamentally, changing people's behaviors, expectations, and societal norms. And then our mandate really is how do we tap into these new technologies and interfaces to really make investing more accessible, more intelligent, and personalized. So really start breaking down the barriers around investing and trading, and make it more of a big tent so more Americans can participate in the capital market as a way to to secure their financial futures.
So I imagine a lot of the projects you guys work on are things that are based on feedback that your users give you, your clients give you. What type of feedback have you gotten, or been getting on a repeated basis for the past few years?
Yeah, I think that's a good question. So part of, my team's mandate as we look at these new forming technologies and consumer behaviors is we also work very closely with the technology partners in Silicon Valley. We are plugged in with a lot of the VCs in the startup community. So that's another way that we collect feedback. But also, I'm Canadian, so I have to say, we have to focus on, skating towards where the puck is going, not where it is today. So it's a combination of what we're hearing from our clients, but it's also what are these technologies and how are they changing norms? I'll give you an example. It's my cheeky little story, but think about it, Spencer. Regardless of what generation you grew up in or what part of the world you grew up in, we all kind of consistently got one piece of feedback, and which was mostly from our mothers, which is do not ever get into a stranger's car, right? If a stranger pulls up next to you, scream, kick, scream, whatever, just run in the opposite direction. Well, think about what most of us did this morning. We went to our phones, we picked our favorite ride-sharing app, and then we clicked on it to summon a stranger, and then we voluntarily got into that car, no kicking or screaming. It's a cheeky story, but it illustrates the point that these technologies themselves are powerful, but what's more profound is how they're altering societal norms and expectations and behaviors. And it's that lens that we really look through to say, what are current problem statements and irritants and feedback that we're getting from clients, so that utility, but then what are those delightful moments that we can deliver by doing things in new ways that, just seemed unfathomable just a few years ago.
All right, so give us like an example of that.
So let's take what we recently launched in partnership with Facebook Messenger, or recently with Twitter via DM, or with Amazon and their Alexa products in December. So in the last 4 months, what we've done, and we're the only financial services firm to now take, investing and trading all the way from on-demand market information to access to, information and education, all the way up to giving you the ability to transact using that education and information, all within, Messenger, or all within Twitter DM, or all through Alexa. And the reason that's important, because what we heard from our clients was, I want to cut as many steps between getting the information, analyzing that information, and taking action, with that information. So now if you're sitting on Twitter, which I know you guys are, because we're all active on Twitter, because news breaks on Twitter, influencers are moving markets based on their tweets. Now you're consuming those tweets, you're connected to your community of investors and traders right on Twitter. And then through the power of our AI and machine learning, we're helping you contextualize that barrage of information that's coming your way. And now you can swiftly take action right while you're sitting within Twitter DM, because, every minute matters. but what we want to do is we want to empower your decision making, make you more confident, and give you the ability to act. So that's something we've heard, this notion of help it make more accessible, bring it to where I am, and then make it more intelligent, help me make sense of it. And we saw that with all the volatility the last few weeks. And then personalize it, make it relevant to me, because I have different needs than Spencer or Joel. And I think that's the feedback based on which, we're rendering these new experiences.
All right. So one of the things that I think, Sunayna, makes technology on Wall Street more interesting is because there's two ways to look at it, right? You can look at it in terms of innovating how people interact with their money, and also you can invest based on new technologies. So since you're looking at AI, machine learning, all the new hot stuff, what technology are you most excited about this year?
Yeah, I mean, I think the point that you make, it definitely underscores a lot of the work we do. If you think about technology has by far had the most influence on our relationship with money, right? Think about the way we make money, the way we keep an eye on our money, how we spend money, save money, invest money. All of those aspects have been heavily influenced by technology. The piece that we're really leaning into is really around artificial intelligence and machine learning. And again, it's driven by that problem statement of, information is not the issue in 2018. We're surrounded by information from everywhere. The issue is make it relevant and make it contextual and personalized, right? Break it down and help me make sense of it so I can take action. And that's really where the power of machine learning and artificial intelligence really kicks in. And we're already starting to see those wins in some of these experiences that we're rendering through these new interfaces. So, that's an area that I think we're going to continue to lean in and do some really cool things.
Do you want to tease a little bit more? Anything new you're working on specifically?
I think what you saw us launch on Twitter 2 weeks ago, dude, give us a break. We just shipped a really cool product. I'm giving my Tiger team 1 week off before we dive into the next big thing. But no, so you'll see things along those lines, kind of making the education piece that we're bringing to the marketplace, making it more contextual and real time, as we did with the recent volatility. But I think, again, using the power of AI. The other piece is also, as augmented reality becomes more commercialized through ARKit on Apple and AR Core on Google, that's an area that's really fascinating, because if you think of our thesis, which is all about breaking down barriers and making investing accessible and personalized, I think AR is going to be a really cool way to kind of break down those barriers and take an opaque space like investing and make it more tangible and also personalized. Now, so there, I just gave you a little nugget.
Yeah, appreciate that. I'm curious. Are you yourself a market person, or are you more of a technology person?
So I have always kind of been at the nexus of finance and technology. I got my start in finance. So I started at TD Bank up north in Canada as a rotation analyst, which was great because I got to work in many different areas of the bank, from client-facing roles to technology to strategy. And the thing I realized very quickly, Spencer, is what gets my mojo going is when, we're solving complex problems, right? Or we're building something new, kind of, building for the future, something no one's ever done. So, I've always leaned into assignments where it's the intersection of technology, but channeling that technology to make finance, again, more accessible, more relevant, and just democratizing it for the masses.
So I'm curious then, do you have like a morning markets routine?
Yeah, I mean, I start the morning. I just actually started doing something that VJ, our CIO, got me hooked on, the morning miracle ritual. It kind of helps you take control of your morning, so you're not jumping out of bed and straight to your iPhone and emails. So, after I do some of that, one of the first things I check on is Twitter, because, I get caught up on, what's been happening in the world. And I'm also bi-coastal. I split my time between New York and San Francisco, and it helps fill that space in the time zone difference. especially when I'm on the West Coast, kind of what's been happening in the markets. So, that's one of the first places I go to. And now, because TD Ameritrade is on Twitter, I can go right from consuming the news, checking in on what my friends and community are talking about, what's relevant, and then quickly I can hop onto Twitter direct messages and, get a quick snapshot of my portfolio and then whatever action I might want to take. But Twitter's been great because it's helped me get connected to a lot of smart people and, ingest kind of what they're saying, how they're thinking about things, and kind of formulate my own opinions or validate or, kind of shift and pivot. So I found Twitter to be, a great interest graph.
So is it fair to say that, personally and professionally speaking, you are bullish Facebook and Twitter?
I think I'm bullish any technology that kind of helps break down barriers. I mean, I think one of the things, and this might help give you a sense of, why I am so obsessed about this notion of accessibility is, I'm the daughter of first generation immigrant parents who moved to Canada, started from the ground up, and they're also small business owners. And I remember Spencer from the earliest days, kind of going to the bank with my dad as he would go talk to his financial advisor or a small business advisor. And I always remember thinking, I was fascinated, like going to the bank was kind of cool, go figure. But I was just fascinated about how everything was complex and opaque and you had to wait and get permission. And I remember telling my dad isn't it your business? Isn't it your money? Why do we need this dude's permission? And that's always been my obsession. I think anywhere you can kind of cut the intermediaries and, make things more transparent and interactive and immersive. There's over 340 million Americans, and yet only a subset of them are engaged in the capital markets. And part of it is there's too much jargon, there's too much complexity, and using technology, we can break down those barriers and create that big tent so more people can participate, including millennials like us and now Gen Z. And I think, try to create the next 1%.
All right, we've been on the line with Sunayna Tuteja. She's with TD Ameritrade. She's our Director of Emerging Technologies and Innovation. Again, she'll also be at the Women's Wealth Forum March 21st in Boston. So check that out, bzforum.com, promo code PMP. Get a discounted ticket. Sunayna, thank you so much for the time this morning.
Thank you, guys. Have a great Friday.
All right. We kept you very, very long today. This is an old school pre-market prep show when we used to go to 9:45, right, Joel? This is back to the throwback days of pre-market prep. But we are done now, so we're going to let you go. That is our show for the day and for the week. Don't forget to catch our podcast on iTunes, SoundCloud, and Stitcher, or YouTube if you missed any part of the show. We'll be back full throttle on Monday. Dennis will hopefully have survived his vacation to Disney World again. Benzinga Wealth Forum, don't want to leave you without mentioning that one more time. bzforum.com is the site to get a ticket for the event March 21st in Boston. Hope you all have had a good morning so far and a good rest of your day, and have a good weekend. And we will see you folks on Monday.